It happens every few years. Bitcoin crashes. Everyone says it's dead. And then almost every time, it comes back stronger than ever. It's confusing, frustrating, and for anyone watching from the sidelines, it's hard to tell if you're looking at a once-in-a-generation opportunity or just another digital bubble waiting to burst. And now, here we are. Bitcoin's back in the headlines. The price is going up. Friends are talking about it again. News anchors are scrambling for opinions. And you're stuck between two thoughts. One, I should have bought it when it crashed. And two, but what if I'm too late again? So let's clear all this noise. Because underneath the hype, there's a pattern in Bitcoin's history that very few people understand. A cycle that has predicted almost every major move Bitcoin has made for the past decade. And it just repeated again. But before we break it down, let's zoom out for a second. Because whether you love or hate Bitcoin, you have to admit one thing. It refuses to die. Despite crashes of 80%, governments trying to shut it down, celebrities making fun of it, and countless headlines calling it a scam, it keeps coming back. And every time it does, the same story plays out. New investors flood in and the price skyrockets. People who bought during the lows suddenly look like geniuses. And those who waited on the sidelines are left wondering, how did I miss this again? But this time is different, and not in the way you might expect. Because we're not just looking at another price increase, we're looking at a moment in Bitcoin's life that has only happened 4 times in history. And each time, it's triggered one of the biggest surges the crypto world has ever seen. It's called the halving. And the last one happened in April 2024, meaning the ripple effects are now building towards something that could define Bitcoin's entire future in 2025. But first, you need to understand something important. Because Bitcoin doesn't just rise because of algorithms or code. It rises because people believe it's going to rise. It runs on network effects, like social belief and money. And these halving events? They've historically acted as ignition switches. They cut the supply, while interest picks up, and suddenly, the price starts moving. And once it moves, people notice. Once they notice, they buy. And once they buy, you know how that story ends. But you also need to see both sides, because while history says one thing, the future brings some serious risks we've never faced before. From rising inflation, to looming regulation, to the question of whether Bitcoin is actually evolving or just stalling. This year is far from predictable. That's why by the end of this video, you won't just know if buying Bitcoin makes sense right now, you'll know exactly what kind of bet you'd be making, and whether it's a risk worth taking. And if this video is helping so far, make sure to like and subscribe so you'll never miss a video again. To understand where Bitcoin might be going in the future, we need to look at what it's done before. Because unlike most assets, Bitcoin runs on code, and that code has a built-in countdown. Every 210,000 blocks, where each block is basically a batch of Bitcoin transactions, added roughly every 10 minutes. The network cuts the reward for mining in half, and mining just means using powerful computers to solve complex math puzzles. The first one to crack the puzzle gets to add the next block of transactions, and earns new Bitcoin as a reward. When that reward gets cut, fewer new coins enter the system. And that moment is called a halving. And that simple change, it shifts everything. It means fewer new coins are created. So while demand stays the same, or even increases, the available supply drops. And every time that's happened, the same thing has followed, a surge in price. Not right away, but slowly, and then suddenly it goes up. In 2012, after the first halving, Bitcoin went from around $12 to over $1,000. The second halving? In 2016, the price climbed from $600 to nearly $20,000 within 18 months. In 2020, it happened again. The halving reduced supply, and within a year and a half, Bitcoin exploded from $8,000 to almost $69,000. Each time, the pattern looked similar. Slow at first, then a breakout, and then everyone jumped in. And now here we are, post-halving, again. The fourth one took place in April 2024, and if the pattern holds, the second half of 2025 could be where the real move begins. But here's where things get interesting. Because this cycle isn't just about supply and demand. It's also not about miners and halvings. This time, there's a new player at the table, and they weren't here before. We're talking about institutions, asset managers, pension funds, and billion-dollar firms that used to ignore Bitcoin, but are now quietly buying in through the back door. BlackRock, Fidelity, Goldman Sachs. They're not just watching anymore. They're building products, launching ETFs, and telling their wealth clients that Bitcoin might be worth holding. That changes everything. Because when institutions enter a market, they don't trickle in. They flood in. They move slow, but they move big. And even a small shift in allocation, say 1% of a portfolio, translates into billions of dollars flowing into Bitcoin. But here's the catch. Because while that kind of demand can send prices soaring, it also brings a new set of risks, like regulation, and the possibility that Bitcoin is no longer the wild, decentralized playground it once was, but something that's being monitored and controlled. And that's why this time is so different, because we're not just replaying the past anymore. We're stepping into a future that's never existed before. This new phase for Bitcoin isn't just about higher prices. It's about what Bitcoin is becoming. Because with institutions now stepping in, with billions on the line, and governments watching more closely than ever, the landscape is changing fast. For some investors, that's a good thing. It means more legitimacy, more access, and more money flowing in. But it also means more rules and regulations, and maybe less freedom too. Bitcoin was born out of rebellion. It was created in the shadow of the 2008 financial crisis, a response to broken banks, bailouts, and money systems people no longer trusted. It wasn't supposed to be polished and regulated. It was supposed to be free. But today, that vision is being challenged. Governments are rolling out stricter crypto policies. Central banks are exploring their own digital currencies. And tax authorities around the world are tightening their grip on every transaction. So while adoption grows, so does surveillance. And that creates a new kind of risk. Not just financial, but philosophical. Because the question is no longer just, will Bitcoin go up? But what is Bitcoin actually turning into? And that leads to the real decision. Not just whether you should buy Bitcoin, but whether you truly understand the kind of bet you're making. Because if you're buying Bitcoin expecting smooth returns, like a stock or an ETF, you might be in for a shock. This is not a predictable asset. It's not backed by a company. It doesn't pay dividends or have a CEO. It rises and falls based on belief, momentum, and network demand. And yes, that can lead to incredible gains, but it can also lead to painful drops. So if you choose to invest, do it with eyes wide open. Because Bitcoin's not a savings account. It's a high-risk asset that can swing 50% up or down in a matter of weeks. But for some investors, that's exactly what makes it worth it. Because maybe the real question isn't even, should I buy Bitcoin? Maybe it's, who will I be in 5 years if I don't? Imagine looking back, seeing the price doubled, tripled, or maybe even crashed. Would you regret getting in or regret doing nothing? That's what makes this moment so powerful. It's not just about making the right move. It's about making an informed one you won't second guess, no matter what happens next. And while everyone's focused on investing, no one's talking about where they store their money. And that decision, just leaving cash sitting in the bank, might be one of the most dangerous financial habits right now. So in the next video, you'll find out why traditional saving could actually be making you poorer, and what banks would rather you never discover. So click the next video to see why keeping money in the bank might be the biggest trap of all, and what to do instead.